Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It's Monday, and you'll see by the newspaper that it was a broad-based rally. Great day. Anyway, with that being said, as a trader, you know what type of day it was. Last night, we talked about the futures down 9, which would have been a good setup in order to maybe close up 9 to 10, and then there would have been a lot of activity for traders to make money, especially for those that came in flat-footed looking for some things to do. If you happen to buy into the 1770 area or 1775 last Thursday and Friday, saying the oscillator's at -60, I'm going to buy here because I do think if we do test the 50-day, I want to be positioned, then you know what, you were involved for this gap up and you took some risk. So congratulations to you. If you're a macro investor, you're probably not even sweating a bit because these upper trends are so far off from the macro trend that you don't care whether we're up or down 2% from here in the last 2 weeks, but if you're trading for P&L, you definitely do. So anyway, with all that being said, let me just show you real quickly here. If you look at the chart since November, remember I was just telling you about the macro investor. This isn't even really the macro trend, but this is more intermediate, tested 3 times, not even close. This upper trend though, that you navigate as more of a professional active trader, we broke below it and we came just right back up to it to almost retest it. The problem with today was, which I guess was only a problem for some, first of all, if you look at this chart here, this upper level, this is pretty much when I went from maybe 6-7 positions to a little risk off when we broke the 8-day and closed below the 21-day. So I was hoping for a move down to open around the 50 and get involved, or even a flat to be able to trade through this lower pivot, which was right here. Instead, we had a gap up. It went very quickly in the first half an hour, and then basically did nothing. If you look at the chart of the spiders, you could see it, because if you're trading it, you had a, where are the spiders here? Okay, let's go to the SPX. Maybe the data's not there. You had to really act very fast. Otherwise, you weren't getting anything. Okay, this is your first half an hour move. Boom. Okay, from there, you talk about a red dog reversal. How could you see it on a 5-minute basis? Well, here's your red dog reversal on a 5-minute basis, where you had your huge move forward, a little follow through, little topping tail. Then you could have even drawn a little like ascending channel here, and that led to a little bit of a corrective move. And then we came off the lows, and if you look at how we closed at the end of the day, pretty much nowhere. So there wasn't much money to be made in the indices if that's what you were trying to do. Almost the same thing for Apple. Apple, if you didn't have it long, right, and you went, just say you went into it quickly right here when you had a little bull flag, maybe you made a little bit of money. But overall, if you waited, what I did is I was involved in Twitter trying to short that, so I wasn't involved in this Apple move, so I kind of missed that. But then it sort of was hanging around and looking decent, so I started buying a little bit into here, thinking that perhaps we get a nice little flag type pattern for follow through. Didn't happen. Came lower, then it broke this 561, and then it was pretty much lethargic all the way into the close, where big quick push, this grinding lower, crappy action. So for an active trader, it really was very lethargic and nothing. But in the scheme of things, you go to your daily chart and you look at it, it still looks fine. It still looks like it's flagging. Remember how many days of monotonous what we had to deal with in this range that consolidated this breakout from that 492. So here we are higher, and it's still acting fine. It's just there's no momentum, and I guess rightly so. We're still waiting to see what happens with the Fed on Wednesday. We're still waiting to see what happens with China Mobile, and here's your 21-day. So with that being said, it was just a little bit of a pain in the you-know-what that it went very quickly, making it seem as if it could get going, and then turned into a nothing. Just another day in the life of Apple that you saw kind of in here, and that you even saw in here before going. So we'll see what happens. But ultimately, I am in the camp that this can continue to the upside, and that at some point we're going to be into this area, taking that out. Maybe it's after the Fed, maybe it's after earnings. I don't know. That's why I'm pretty uncommitted, and I'm taking it day by day. If you look at Google, we talked about the the potential of a bounce. Here was that earnings move. This was your other breakout area, and then corrected a little bit. And I guess you could draw it this way. There's a few different ways to draw this trend line. And it held above the 21-day. Today was a strong day. It also went quick. And now we'll see what happens. Maybe there's a trade tomorrow if it were to take out this little pivot, or maybe it needs another inside day. But ultimately, this is acting just fine. Amazon also acting just fine. little wishy-washy. Today looks obviously better than Friday. It looked good, like it was going to break out Friday, reverse, and then today showed a little bit more strength. Hard to commit to this considering the choppy action as of late, but ultimately, the stock's been acting well. This was your last breakout. Wasn't ready to break above 400. Just consolidated. It's poking its head out. We'll look at that tomorrow. My focus was for the first half an hour or so, if you come back to me, was the social networking space, a space that we've been talking about for weeks. Last Monday, I was like the race to 50 for Twitter and Facebook. Twitter got there fast, then Facebook caught up, and since then, there's been a lot of great action on both those names. Recently, I think a lot of traders were looking at the pain trade because they sold Twitter early or they missed Twitter. They said this can't go higher, so they lost money, unfortunately, without a plan. So today I came in figuring maybe today it's stretched enough. So I was waiting for that red dog reversal to happen. I tested a little bit early, but if you were watching me in the virtual trade floor, you saw they got stopped out 2 or 3 times because it didn't. I was trading Versa high. Then finally, when the red dog reversal triggered, I was short on the VTF, and I'm still short right now. If you look at Twitter, you will see, this is probably not game over for the stock, but you would think that this should produce some type of rest. Look how extended it is from the 8 and the 21 from the prior highs of the new issue. This was a nice little buy spot right around 42. Another nice little buy spot even here. And then this one created one too. And now finally, this day looks a little bit different than many of the other days. So hopefully it leads to a little bit more of a corrective type of activity. So this way the moving averages can catch up, and then we could figure out on how to maybe enter it long again. But for right now, this was the strategy. It pushed above. People want to ask me what's a red dog reversal. Here you go. I pushed above 59.41. So let me ask you a question. Let's come back to me. I want to explain why this works. If you were fading that stock for the last 3 days or of last week, and it was downgraded twice this morning, like, oh my goodness, finally it's my time for Twitter to go lower, and it goes from down 80 cents and trades above 59.40, you'd be like, oh my goodness, it's not going down on 2 downgrades. This has happened before, 3 days before. I have to get out of the way. So some people might have said, okay, let me use that as my stop. So 59.40 is where they got stopped out of their shorts. And then there are some people that are saying, wow, Twitter's going to 60, it's going to 65, it's on the move. I've missed it so far. I want to buy it there. And that's why that 59.40 becomes an action area. So what happened was it traded through it, squeezing some shorts. Then some people might have chased it. And then when it reverses back below it, if you covered your short, you'd be like, oh my God, I got to get back short. So there's a rush to re-short it. And then if you bought it up there and said, wow, what did I just do? I just chased this thing. It went from 42, 46, 53 to almost 60, and I'm buying it now. I got to get out of the way. And that's why it turns into a really nice day trade. And it could also then, after the bar is established, over a little bit of time, if you use that high as a stop, a little bit of a swing trade. So you go back to the chart here, and you will see that that's what we have here. And if you go to just see the 5-minute chart, you'll see here it is. Gapped lower, came back up, flagged. This had to be your stop because you never know. This thing could have went to 65 today. You don't know. No one thought that it was going to go from the low 40s to where it is now. So here is your quick push. What happened here? A nice wide range bar. Okay, that was your first one that closed actually right there. Then, so here is at 59.40. This could have been your spot to short versus this high. So you were giving yourself, what, about 80 cents worth of risk. From there, it tried to come back up and failed. That could have been your confirmation. And then from there, gave you a quick move south of 58. That's about $1.50. Then all of a sudden came all the way down to here, which was even more than that. Quick little bounce. Never looked to reclaim it. Topping tail on a 5-minute chart. Same type of thing. This was almost a red dog reversal on a 5-minute here if you wanted to pretend this was a daily chart. And then from here, came all the way down. This was now 57. So you could pick and choose when you want to cover. Quick little reversal. Didn't really break. If you drew a trend like this, where you can even take that out of the way, didn't really break that trend, and then made new lows and bounced up into the close. So here we are. So with that being said, I'm short a little bit overnight. If for some reason it's up tomorrow, perhaps you trade it versus this area. If the sellers have a lot of control, they probably do not let the bulls reclaim this 58 area. And then if they push the envelope, you have this, and then that. So tomorrow, you have to have a plan. Hopefully, maybe it opens up down a little bit, and then we get one more short through this prior low right here, and then that's how you get continuation. We talked about a reversal, and then it can go lower. Maybe it has an inside day before it, which would probably frustrate some people because people like immediate gratification, even like myself. So you'll see what happens tomorrow. So from here, though, first time you have this reversal here. Now you need to see if you could be short versus that, and if it happens to trade below this point, you get a little bit more downside follow through, and there's no reason why 54-ish can't be seen. All right, this was support 1, this is support 2. We'll see what happens there, but ultimately, at least you had a plan here. Short here versus that. Nice day trade. Could be a day and a half trade or could be a swing trade. It all depends on your time frame. I'm still short a little bit. Facebook held up a little bit better. We talked about, let's look at another red dog reversal. And I'm sorry that I keep mentioning this strategy, but this strategy is really good. Here was when you had this descending channel, it was in corrective mode, finally traded below this 44.04, came back above. You could have bought at 44.04, put a stop in at the low of the day at 43.55, and risked 60 cents for what was a really nice day and a half trade. And then you broke this downtrend, showed some commitment, gave you another trade, did it again, and then look what happened. So at this point, maybe some sellers are being brought out because of this 55 level or 54.80. And I'd love to see it just flag up here. Then I think flagging up here could reset it for a move through highs, or it doesn't wait. We shall see. But ultimately, it kind of avoided, or it didn't really care too much that Twitter needs a rest. That's fine. This has been a great trade since those earnings. Remember, we talked about Facebook being, a great-looking stock as it built this cup and handle pattern. Went over the chart with Cramer, Google, Scott Redler, and Jim Cramer, and you'll see this is what we talked about at the road back to 38, and look where it is now, a lot higher than that. But anyway, that's where that is. As far as Groupon, some people pointed it out. Looks okay still on the daily chart. Flagging right here. Nice little move. This was at day 1. I remember getting long this, sold it for day 2, and now it's flagging again. So I guess it could be another move to the upside there. I went in there a little bit small. Some people are trying to look at CSIQ. For the solars, they've been out of play, but this being typically the strongest one, poked its head out. So maybe tomorrow we'll go over some solar plays for the morning call. And really, the banks, not much to say here except for Goldman for the first time. Really closed above 170, so I'm hoping that leads to better action in the banks and more follow-through. Lately, there's been really no follow-through in these banks. On the close, I bought a little bit because I know that if it's going to be taking out this tomorrow, I'll probably be buying it, so I'm in some. I also nibbled a little bit on Bank of America. Still not looking so compelling, but we'll see what happens here. It was looking really nice here when you had this little bull flag on this engulfing day. Topped out. Right there, you could have had your little stop at the upper level or right here. And now it's trying to hold around, and I'd just be a little careful. If you're really, really short term, if you bought today, use 15.12 as your stop, and that'll be your line in the sand. If the banks want to get a little bit better, really this has to start taking out 15.50 for it to look like it could have a day 1 and get back to that 16 area. So with all that said, today was a day that I think a lot of traders were frustrated, especially with those with risk down that were a little flat-footed. I was in that camp. I came in flat. Thank goodness you had that reversal in Twitter that helped out, but trying to buy some of these names that already had that first 30-minute room definitely proved a bit frustrating. Hopefully tomorrow, if maybe there's an inside day in the market, there'll be better action. We'll be able to see the relative strength and weakness. We've been lately tending to do better on down days, long stocks versus long on up days, as go figure that. So P.S. 2 more days till the Fed comes out with their news. I'm hoping that the language is strong, that the economy is getting a little bit better, that either they reduce it by $10 billion this time, or at least in January. I think the market's kind of set up for that. If we continue to rally into Wednesday, then it might change it a little bit. I was hoping to be a little bit on the defensive going into that, so when it happened, we could have a reflex move. But we shall see. Again, it's December. There's a few weeks left of trading. Most of the money's probably been booked this year. If you're trying to trade for P&L or cash flow now, keep it tight. Don't do too much. And just try and put together a month and stay unfrustrated, if that's a word, and enjoy your family, because the market will be there, and I want you to be in a good head when we start 2014. See you tomorrow morning. Have a good night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit T3Live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.